Bitcoin, a digital currency that changed the rules of the financial game and opened new horizons for trading and investing. In this video, we'll dive together into the fundamentals of Bitcoin, learn about the technology that underpins it, cover how it is created and how we store it, and look at its practical uses, as well as the advantages and challenges it faces. Bitcoin is the world's first decentralized digital currency. It was created in 2008 by a person or group of people using the pseudonym Satoshi Nakamoto. The launch of Bitcoin came as a direct response to the global financial crisis at that time, with its creators aiming to establish a financial system that is not subject to the dominance of governments or central banks. Bitcoin relies on an open-source software protocol that allows anyone to inspect the source code and contribute to its development, which enhances the project's transparency and reduces the likelihood of monopolies or manipulation. Bitcoin is based on blockchain technology, a distributed ledger that records all transactions across a network of interconnected computers. Transactions are collected into digital blocks, and when a block is filled, it is verified and linked to the previous block, forming an immutable chain. This structure ensures security and transparency, since any attempt to tamper with a block would require recalculating all subsequent blocks, an almost impossible task given the enormous computational work involved. Bitcoin is produced through a process called mining, where specialized computers with huge processing power solve complex mathematical puzzles. Each time a puzzle is solved, a new block is added to the chain, and the miner receives a certain number of bitcoins as a reward, in addition to the transaction fees included in the block. The reward is reduced at a set rate, approximately every 4 years, in an event known as the halving, which limits total supply and creates scarcity similar to gold. The total number of bitcoins that will ever be created will not exceed 21 million. To hold and manage Bitcoin, you need a digital wallet that stores your private keys. There are several types of wallets. First, software wallets, applications that run on your phone or computer. They are easy to use, but more vulnerable to hacking if the device is not well secured. Second, hardware wallets, physical devices that look like USB sticks and store private keys offline, making them the safest option for protecting your digital assets. Third, paper wallets. Your private keys are printed on paper or stored as a QR code away from any electronic connection, but they must be protected from damage or loss. The private key grants full authority to send the Bitcoin from your wallet, so it must remain secret and well protected at all times. Bitcoin's uses vary between being a means of payment and an investment asset. It can currently be used to buy goods and services from hundreds of companies and merchants around the world, especially those that adopt new technology. Some users prefer it for international money transfers because it can be relatively fast and cheaper compared to traditional bank transfers. On the other hand, investors view Bitcoin as digital gold, holding it as protection against inflation and market volatility. Bitcoin enjoys several prominent advantages that make it unique. It is decentralized by nature, not subject to the authority of any governmental body or financial institution. Blockchain technology also provides a high level of security and transparency, allowing anyone to verify the complete transaction record without infringing on users' privacy. So, that was our topic for today. See you in the next video. Peace!